Hello and welcome to my YouTube channel Alexandru. On this channel you will find news and information about cryptocurrencies and business, also very good information about different methods of earning money. If you like this Alexandru YouTube channel, don't forget to subscribe, like and share this video. In the clip presented today we will talk about creating a crypto portfolio 2023, how to create a well-structured cryptocurrency portfolio, how to build a crypto portfolio. Building a balanced crypto portfolio can contribute to the success of long and medium-term cryptocurrency investments. Thus, a well-thought-out and properly structured cryptocurrency portfolio can reduce the risks associated with the volatility of cryptocurrencies. The more instruments we incorporate into the portfolio, diversification. The more we will disperse the risk. It is quite easy to start investing in cryptocurrencies, as you only need to buy some Bitcoin, Ether, or other cryptocurrencies. Some prefer only major cryptocurrencies while others are willing to try smaller altcoins. But what is the best solution? We have a much better chance of success if we carefully analyze what we invest our money in and how we balance our portfolios. Depending on our level of risk tolerance, there are a few suitable ways. These are worth addressing because none of them are complicated. Before we delve into the topic, let's see what exactly we're going to talk about in this article. What is a crypto portfolio? What is instrument allocation and diversification, concentrated versus diversified cryptocurrency portfolio, differences between cryptocurrencies, replaced by money, stablecoins, securities tokens, utility tokens, how to build a balanced cryptocurrency portfolio, portfolio trackers, conclusion. 1. What is a crypto portfolio? Portfolio is a collection of assets/instruments held by investors and traders. For the most part, portfolios are made up of different types of instruments. In the case of cryptocurrencies, this usually means altcoins and crypto financial products. This is very similar to the method followed by traditional investors, but here we find only one class of financial instruments, cryptocurrencies. We can track our portfolio manually, but today there are already numerous applications and programs through which we can monitor the allocation, as well as the gains and losses on it. For day and short-term traders it is vital, but it can also be quite important for hodlers and long-term investors. 2. What does instrument allocation and diversification mean? It is worth knowing these terms if we want to create a cryptocurrency portfolio. Allocation means investing in different asset classes, i.e., holding stocks, commodities, and cryptocurrencies. And diversification is an additional distribution within them. Thus, you do not own only one type of shares, but also those of some agricultural, technological, and pharmaceutical companies, for example. Both strategies help reduce risk. Technically, cryptocurrencies are a single asset class/instrument, but within it you can easily diversify with different coins, tokens, products, each with its own purpose and way of use. It is possible, for example, that your portfolio contains 40% Bitcoin, 30% stablecoin, 15% NFT, and 15% other coins. 3. Concentrated versus diversified portfolios. Most advice says that portfolios should be diversified. For investors, this is a common solution, but we must know that the allocation of our funds has not only advantages, but also disadvantages. Diversification can reduce risk. Earnings can cover losses and your balance will remain relatively stable. The chances of a significant price increase with each cryptocurrency held. Of course, not all investments will bring profit, but with careful allocation, it is much more likely that in the long run we will make a profit. In any case, the more diversified a portfolio is, the more exposed it is to market effects. Most investors aim to outperform the market and look for big gains. A sufficiently diversified portfolio often produces higher returns than concentrated portfolios. On the other hand, it is true that managing them requires a lot of time and research. If you're a dedicated investor, you need to know what you're doing. The larger the portfolio, the more likely the investor has less associated knowledge. And if someone owns crypto instruments on several different blockchains, they may need several different wallets or exchanges. Everyone has to decide for themselves if they want to diversify and how they do it. In general, it is recommended that everyone do it. 4. Differences between cryptocurrencies. BTC is the most popular cryptocurrency and also leads the capitalization list. But a balanced crypto portfolio may contain other currencies in addition to this to reduce risk. But what should these cryptocurrencies look like, replaced by money? These days there are few cryptocurrencies designed exclusively for payments. However, if we look back a little, we see that most projects were born only to be used as money, for the transmission of value. The most well-known example is BTC itself, but XRP, BCH or LTC can also be found here. These are the so-called first-generation coins, and they already existed before Ethereum and smart contracts. Stablecoins. Stablecoins follow the exchange rate of the physical instrument used as collateral, which can be fiat money or even precious metals. BUSD, for example, tracks the US dollar 1:1, thus having an exchange rate of $1. Pax Gold works the same way, but is backed by gold, so one token is worth exactly 1 ounce of gold. This gold is deposited by the issuer when the token is created. Stablecoins cannot boast of high returns, but their main attraction is stability, as the name suggests. Securities tokens, like traditional securities, related tokens can represent many things. They can symbolize a company's shares, bonds, or even a right to vote. Traditional securities can easily be tokenized and thus placed on different blockchains, in which case the tokens are subject to normal securities laws. This is why, before such a token is issued, in many countries the licensing process must be completed. Utility tokens. These tokens are necessary to be able to use some services or products. For example, both BNB and ETH are such tokens. With both you can pay transaction fees to use decentralized applications, dApps. A lot of projects are issuing their own utility tokens as a kind of fundraising/capital. Theoretically, the value of the token is related to the way of use. Governance token. By owning such a token, you often get a share of the project's revenue, and when making decisions, it gives you the right to vote. Most frequently we meet them in the case of DeFi protocols, Uniswap, SushiSwap and PancakeSwap being among the issuers. The value of the tokens is also tied to the success of the underlying product. Financial products. Diversification is not simply about owning several different cryptocurrencies. You can choose from many other products. In the world of traditional investments, for example, it is possible to own as a security not only stocks, but also bonds and mutual funds. Today there really are a lot of options, even from multiple blockchains. One of the richest offers is provided by the Binance Exchange, but as in all cases it is worth delving into the topic beforehand and convince yourself of the risks. 5. How to build a balanced crypto portfolio. Every investor has individual preferences, ideas about what they want to own, but there are some general rules to consider. The portfolio should be divided between low, medium and high-risk instruments. What matters here is real balance. Where high-risk cryptocurrencies predominate we cannot speak of balance. The gain can be quite big, but the loss can also be huge. Individual risk tolerance is crucial, but certain limits must be set. Stablecoins also provide liquidity. For most DeFi projects, stablecoins are very important raw materials, and their use is vital in many cases. The portfolio needs to be rebalanced from time to time. The cryptocurrency market is volatile and it pays to adapt our decisions to the circumstances. When investing new money, let's be careful not to overweight any area. It is especially tempting to invest money in something that has produced beautiful growth right in front of us. But let's not be greedy, but let's carefully analyze where our money could give the best return. Do your homework, do not neglect this aspect. Relying on few sources you can be willing to make wrong decisions. By investing in cryptocurrencies you are trying to make money, and wrong decisions can cost you a lot here. Don't invest more than you can safely lose, no matter how much capital you have. The failure of your positions should not have fatal consequences if things go wrong. 6. Portfolio trackers. These programs and applications help you monitor the evolution of your cryptocurrencies. With their help, you can see if the chosen tools behave according to your long-term goals. Let's see the most popular ones. CoinMarketCap. It is the oldest and most popular data collection site, which also launched its own portfolio tracking solution. Available on both desktop and mobile devices. Cryptocurrencies and amounts must be entered manually as it cannot be associated with exchange accounts. In any case, it is useful to be able to enter the purchase price so that you can track the exact amount of profit and loss. CoinGecko, a site also known for providing data. It has its own portfolio management application. It can be used for free on both desktop and mobile devices. If you visit the site frequently, this service is worth a try. Blockfolio, if you want to trade through your portfolio tracking app, Blockfolio is the right choice. It has been operating since 2014 and is a household name in the cryptocurrency industry. However, it only has a mobile version, not available for PC. Delta, a mobile application that allows you to track both your traditional and cryptocurrency portfolio. You can connect it with about 20 exchanges and numerous wallets. There is a paid version that offers more features, but it also does not allow in-app trading. 7. Conclusion: in the cryptocurrency market, the biggest focus falls on Bitcoin. But this is no reason not to have a balanced portfolio. If BTC starts to fall, the losses can be offset by the other currencies, so some degree of diversification is always useful. And this is not just about holding several different instruments. With a proper strategy, our portfolio can be tailored to our risk tolerance. If you like this clip and learned something from it, don't forget to like, share, subscribe.